Hello, everyone, and welcome to Valley Homes on TV. I'm Debbie Endehart Giordano, along with Todd Flesner.
Hello, everyone. Good to see you all again.
Yeah, good to see you. This is nice. It's almost like summer weather here at the end of October, so it's really nice and pleasant. You folks can tune in every day of the week, Monday, Wednesday, and Friday at 6:30 p.m., and Saturday and Sunday at 9 a.m. on Channel 26, and I think some other times in between also. So we're good. How about your guest?
Yeah, no, I'm glad that folks are joining us as well, and that they have the opportunity to meet Wendy Roberts. Wendy is a friend of mine, is here to talk a little bit about some alternative financing.
Okay.
So, welcome, Wendy. We're glad to have you.
Thank you, Todd.
Great.
Thank you very much.
So, we always like to start out, just get to know a little bit about folks, their background, their experience. So, maybe tell us a little bit about yourself.
Sure will. So actually, I'm from Indiana, southern Indiana.
Oh, wow.
So I'm a Midwesterner,
Uh-huh.
and I grew up right across the river from Louisville, Kentucky. So it's about as southern as you can get.
Mm-hmm.
And I actually am a graduate from Indiana University. I got my accounting degree from the Kelley School of Business there. And I also took my CPA exam right after school.
Oh, wow.
So I ended up actually getting a position to go to Miami. So I left the cold weather behind and went to Miami, Florida, to work in the industry.
Great.
Okay.
And so, obviously, you're not in Florida any longer.
So how did I get here?
How'd you get
We
here?
figured that out. Todd's really smart on this show.
Very, very good question.
Yes.
So thank you for asking
So
that.
what brought you here and what keeps you here?
Well, thank you. I will tell you, that's awesome. Thank you for that question. Actually, I was working in public accounting, and a client of mine asked me if I wanted to be their CFO for a startup. So I said, okay, I'd been in public accounting for quite a few years, and I wanted to perhaps look at a different change. So I said, okay, well, show me your business plan, show me what the product is, et cetera, et cetera. And I said, where is it going to be located, right? Because I knew these guys, they were both from University of Florida, very, very well-educated guys in engineering. And they said, well, California. I'm like, oh, okay, that's interesting. So I actually took the position because I liked what they had to offer. And I did the 4-year track between Florida and
Wow.
California every 3 weeks. And so we eventually sold that company to a publicly traded company, a much larger publicly traded company 4 years later. That was a great opportunity. And then I just decided, I looked at the opportunities here in the Silicon Valley for the things that I could do, the things I could offer. And I said, I want to stay here.
Okay.
So the weather is awesome here. So you probably would like to know what I do, what my favorite thing to do here.
Sure.
Yeah.
Is obviously the weather is beautiful. And I'm a cyclist.
I'll be darned.
Yeah, I'm a cyclist, so I cycle.
You do look fit. Yeah.
Well, thank you. I cycle all over the Bay Area. We've got terrific mountains. There's a whole lot more mountains here than Florida because it's
Yeah.
very
Yes.
flat in
Yeah.
Florida. So I love to do cycling. That's my passion.
Wow. Oh, nice. Good.
Terrific. So you're one of those that's out on the roads that we'll see on the weekends,
Yes.
climbing the hills. And
Yeah, we're called
one of
weekend
those.
warriors. Yes, we are.
well, good. Well, when you're not doing that, you're in your role then with Full Spectrum Business Financing. Tell us a little bit about that business.
Sure, thank you for that. I'm actually the founder and CEO
Okay.
of that company, and our focus is to look at to find the right solution for the business owner. We focus on business lending as well as real estate lending. And so for us, our value proposition is that my years of experience as a CPA and a CFO and a corporate executive, that I just recently retired from corporate America and started this company. And then I also have a business partner. He's been in the lending business for 30 years. So we have joined forces, and we believe we can provide a very good product for a business that needs that funding. And sometimes, it's immediate need. Sometimes you need to do some planning out. So we provide, the consulting as well as the opportunities to be able to fund.
So, Wendy, how long has the company been up and running?
So we actually started the company in late February.
This year?
Of
Oh,
this
wow.
year.
Great. Okay.
So
Good.
you're early stage.
We
with
are
your
early
company.
stage, but
Okay.
it's a good thing. We've already hired our first employee, and
So
we're moving very, very quickly.
So you kind of talked about, the types of lending. So what would make your company different than, say, other companies?
I like to see that for us is that we want to be able to have a value proposition in that we take your needs in mind. So in other words, if you have a hard time trying to get a loan from a bank, we try to focus on finding what the right solution is for you. And also, in the sense that, because of my CPA background as well as Joe's background, my business partner, we do believe that we have the opportunity to be able to bring a certain value that you really can't find somewhere else.
Okay.
Okay.
Well, good. Well, looking at the list of things that you do, we did a little bit of research on you. And so one of
Sure.
those things is AR factoring. For folks
Right.
who don't know, what's AR factoring and how do you help with that process?
Sure, great question. So AR factoring is our accounts receivable factoring.
Okay.
In essence, what it is you're selling part of your accounts receivable to get the cash up front. And there's a charge for that, and the lenders do charge for that convenience of getting that cash. But what's really nice, let me give you an example of like if you're a staffing company and you have a contract with one of the Bay Area companies here, and let's say, for example, you don't get paid for at least 60 days, sometimes longer, but you need to make payroll every week. So you can get an advance on that accounts receivable so you can make that payroll and keep your employees happy. So that's an example of accounts
So
receivable.
it helps to
factoring.
smooth out some cash flow
Absolutely,
issues.
it's the
Yeah,
cash
well,
flow.
I think with running businesses, and Todd and I know that the cash is king.
Absolutely.
Definitely.
Cash
cash
flow
is
is
king.
definitely
For sure.
a problem and needs to be solved. So how about construction equipment financing?
That's another great offering that we have. And if you haven't noticed, there's an awful lot of construction going on.
Absolutely.
Awful lot.
That's
Right.
why I picked this up to ask.
Yeah, there's a lot. Not only is it office buildings that are going on downtown with Google coming in, but also just, with the Bay Area, we need more housing. So these machines that you see that are the earth movers, or what we call yellow iron, they're very expensive. And for a company to be able to shell out that kind of cash really has a strain on their cash flow. So it makes a lot more sense to be able to leverage it. Plus, from a tax advantage, you get the depreciation, et cetera. I'm not proposing. I'm not giving tax advice.
But there's your CPA background coming out.
But I am. Yeah, that's my CPA background coming out. But there is a lot of opportunities to be able to leverage that
Sure.
than using cash.
Okay.
Okay. And so equipment and getting, hard assets in place for businesses. Talk about SBA loans. How might that be something that's different than like an equipment loan?
Oh, SBA loans are awesome right now. The rates are very attractive. There's two different types of program for SBA, and then for those of you who are not familiar with how the SBA works, it's actually guaranteed. The majority of the loan is guaranteed by the government. That's why banks like them. So about 60 or a little bit higher percentage is guaranteed by the government. The rest of it's guaranteed by
I didn't know
a
that.
bank
Interesting.
or
Okay.
a non-bank lender.
Okay.
So there's the 7A, which you can use for business acquisition, or you can actually use it for business expansion. One of the things that the SBA likes to see is if you are expanding to hire new people, to expand your labor force. That's an important aspect for an SBA loan. And the second is a 504. So there's the 7A for the business expansion, and then there's a 504. So the 504 is where you can actually purchase real estate. If you want to
Okay.
purchase an office building. And we have a project going on right now that's for prefab. So
Okay.
it's a 2-story office building that's a prefab. It's
Okay.
about half the cost of a brick and mortar.
And if I'm not mistaken, SBA loans offer low down payment options, correct?
Yeah, they can be very affordable. So you can do 10% down.
Okay.
As well as the interest rates are very affordable, and the terms are really fantastic.
Okay.
All right. Well, let's talk about some real estate.
Sure.
That's our
you bet.
show is all about. We love real estate. Let's talk about a couple topics here: real estate financing, and then fix and flip financing.
Fix and flip, yeah.
Yeah.
I'm
Like
sure
that, like those shows. Those
Yeah.
Let's talk about those two items.
Okay, well, the real estate financing we'll touch a little bit on with, we mentioned the SBA for the 504. The real estate financing is really, you can do multi-family homes, multi-family units. You can do apartment buildings, you can do office buildings. I mentioned prefab. We want to kind of niche ourselves into that because we think it's the up and coming, it's the future, is the prefab. And then the fix and flips, I wouldn't recommend this for a buy and hold. It's just not the right strategy. The fix and flips are more for those that want to make the profit, to try to do something with a 6-month project or less, where you buy a home as that for investment. Okay, this is not for residential, but for investment. You buy the home for investment, and you get it at below market rates. You do the remodeling that's required, and then you hope to sell it within 6 months.
Okay. So all your real estate loans, those really are for investor type
Yes,
of loans,
they're all
not
they're
not
in fact-
homeowner loans.
No, we are not licensed to do homeowner loans, and I'm glad you clarified that. Yes,
Okay.
just strictly commercial residential. I mean,
Okay.
commercial real estate.
Okay, okay.
Good. So in that regards, then how do you help folks then who are looking perhaps at real estate as an investment strategy? How is it that they can utilize you and your services to meet their needs?
Sure. I am, a favor of real estate. I think real estate really builds net worth. I think it's an important part of someone's retirement package. It certainly is mine because I'm a real estate investor myself. I do think, for our experience that we have for our company, we certainly have some attractive and affordable opportunities and options for someone to be able to get into that real estate market and really make a difference in their future retirement planning.
Okay.
Is
Good.
there, just on that topic, is there a time frame? Do you look at the investing in a 10-year window? You said look at it for retirement also. How do you look at the whole package and view in terms of time frames?
Time frames. Well, I think when you look at real estate, you actually have to look at it for the long haul, right? It really is a
I
long haul
agree.
play. So if you have someone who's younger, there's a lot of individuals here in the Bay Area that have, various investments that are probably in company stock like ESPP, or they have other opportunities that they could take those. Perhaps they have to sell and do stock options. They've got some cash, they can put it into a real estate investment. And what's nice about real estate is that, someone, when you have an apartment building or a multifamily unit, someone else is paying the mortgage off for you, right? That's the attractive part. The second is, in most cases, not all, but in most cases, you should see an appreciation in the value. You can always increase your rents, right? Because as inflation goes up, you should be increasing your rents. But yet you might have a fixed rate mortgage on that property, so you're actually getting that appreciation plus
Correct.
that uplift.
Correct.
Right.
So in the long haul, this is a
I'm
long-term play.
glad to hear you say
It's
that,
a
Wendy,
long-term
that it
play.
is a long, and I when I counsel people in real
Yeah.
estate, it is a long-term
Right.
game plan, so.
And that's also why I mentioned about the fix and flips, that it's not necessarily a buy and hold. It's definitely a strategy, and I will also say it's a higher risk strategy than the buy and hold. And you really need to know what you're doing with the fix and flips.
Well, it sounds to me like you're not recommending, like on the TV shows, so
No.
a newcomer come in
Yeah.
and say, "Oh, I can take on this flip here and
Yeah.
and make a quick buck."
Yeah,
it doesn't work that
it
way,
doesn't
does it?
happen
It
that
doesn't
way.
work.
No, it doesn't. And what I would recommend is if someone wants to get into that, partner up with a mentor or partner up with someone who really knows what they're doing,
Uh-huh.
right?
Yeah, good.
All right, so, what are some of the challenges you're seeing today in your
In
company,
financing, yeah.
finance,
Yeah.
all the above? What do you see?
Well, I think, some of the challenges is just education. And that's why I'm here today, is because I think when people look at either financing a business or acquiring a business or buying real estate, they think, okay, if I go to the bank, or I have to do venture capital, or I have to rely on angel investors or friends and family. A lot of people don't know that there are other alternatives out there. And I think, those other alternatives can be very affordable and workable. And one of the things that we do pride ourselves on is that, again, bringing in the CPA and the business experience myself and Joe have, is that we can then get that immediate funding that they need. We can counsel them to figure out how do I get back to the bank. And it may be simply because, they don't have 3 years of banking experience or, the financial statements that are needed. Or it might be something
Yeah,
that
it
they
could
don't.
be a new company getting started.
Could be a brand new startup.
Exactly. I mean,
Yeah, and I certainly have gone through that route with startups.
Right.
And, it could
I
be
can
something.
see that would be.
Yeah, it's challenging for people to get funding.
Absolutely.
And sometimes people don't want to give up equity, so a loan can be a good solution. You might not have a 680 credit score that some of the banks require, and a host of different reasons, of why you're not being able to get the financing from a bank. So you can look to us to get that solution for you.
Good. So you help people overcome those challenges that they might run into. What do you find as your rewards?
Yeah, that's a great question. For me, helping that small business owner, really, that's the rewarding part. It's the ability to see them address and grow and thrive and really succeed. And I think that to me is probably the most rewarding, most definitely.
Let's ask you the last question. What do you
Sure.
see down the road as your goals? You've been a CPA, you've lived in Florida, maybe a 1,000-mile bike run or something. I don't know what you're going to do, but that would be pretty exciting.
Well, yeah, I would like to do another century.
Another century.
That's a little tough.
That would
yeah.
be great.
Yeah.
What do you see in goals and objectives for your company and
For
your
my
future?
company, yeah. We like I mentioned, we're actually growing pretty quickly, which is exciting. And we actually now are going to be offering business brokering.
Okay.
Which what that means is that we, through my partner Joe, will be able to facilitate the buying and selling of companies. So
Okay.
then we'll be able to get the financing through the bank, or if they can't get the financing through the bank, then we can help them finance.
Okay, terrific.
The other part is I'm sorry.
No, I was going to say, there was news to me that you're doing business opportunities. That's
Yeah,
great.
yeah,
That's
business
great.
opportunities. Plus, I want to capitalize on my my CPA and my business experience in corporate America as well as in public accounting. And I have been offering my services as a CFO, as an outsourced CFO for one of them is a
Wow.
blockchain company, and
Oh, that's
another one is
exciting.
another small business here in the Bay Area and one in LA. So
Whew.
being able to offer
You
that,
are busy.
yeah, being able to offer that is we want to expand on that consulting.
That's great.
Yeah, thank you for that. Yeah, we're
Terrific.
excited about it.
Well, good. Well, let's say folks have questions about business financing, getting into real estate investing. How might they get in touch with you if they have questions?
Great question. Thank you for that. So they can reach out to me by email, wroberts@s as in Sam, B as in boy, financing.com. Or you can call me on my mobile. My mobile is 408-206-6697, and the website is www.s as in Sam, B as in boy, financing.com.
Terrific.
Great.
Wendy, thanks so much for being with us today.
Thank you so
Thank
much,
you.
Don. Really
Yeah.
appreciate
Good
the time.
job, yeah.
Thank you so much. I appreciate the opportunity.
Welcome, everyone. Welcome back to Valley Homes on TV. Todd Flesner and I, Debbie Indahar-Giordano, we're here to give you a monthly wrap-up. We're in the month of October. Lots been going on financially, I think. Huh?
There
A
has
lot in the
been.
White House going on, obviously, but
Well, that's an everyday occurrence.
it's been every day. But there's been kind of a roller coaster again in the stock market. And
There has been, yeah.
what do you see?
Well, a lot of up and down in the financial markets, uncertainty. We've seen interest rates have come up just a little bit here in the last week or two. A couple things kind of driving that. One is China. The efforts with China to try to get some sort of trade deal in place. There seemed to be, there'd be an announcement that we're making progress, and then we'll come back. Progress.
And the
then,
stock market's been following that
exactly.
discussion.
The other thing internationally that's driving things is this Brexit, right? The withdrawal of Britain from the European Union, and again we'll have a deal and then no deal, deal, no deal, and so that's played havoc with the financial markets in terms of just uncertainty. And along with that, though, we've also seen the stock market here in the United States do well. Unemployment rate is low.
I'll stop you right there.
Okay, you will.
So on October 19th, San Jose Mercury, unemployment rates at record lows. You're absolutely correct,
They
Todd.
certainly
Good
are.
for you.
So that strength in the economy is really giving good support to our stock market. So all those things in general have led to interest rates coming up just a little bit, about 0.25% or so in the last week or two.
Which is not stopping, you had a buyer that just called you an hour before making the offer, and, you know,
Yes.
so there's a lot of activity going on
A
out
lot of
there. isn't
activity, and even though rates are up a little bit, they're still historically outstanding.
So let me tell you about sales, though.
Okay.
September 27th, about a month ago, home sales drop off steeply. And what we're seeing is kind of a pullback of inventory.
Okay.
And buyers are still coming in, so it's not coming out in the sales as being, you know, showing
Okay,
the
so
actual
when it says
sales.
drop off steeply, does that mean just in the number of sales, or is that the prices?
No, that's the number of sales.
Okay.
But let's look at pricing. So I have September of 2018 and September of 2019. We have seen a reduction
Okay.
in pricing. So a year ago, we were at $1,216,000 for an average single-family home in Milpitas. That dropped down last month to $1,086,000, so about $150,000 bump. And I would say that that's true with the last couple sales that I've put together and some closings that I've got coming up. So that's
Okay.
probably why you're seeing the buyer activity. They're seeing lower, good interest rates.
Right.
Maybe want to get in by the end of the year,
Mhm.
and they're seeing a drop, listing prices going down.
Right, the combination of
Yep.
lower price and
Yep.
low interest rates make
Yep.
it more affordable.
So that's the single-family home market. Now, the condo market really has not changed very much. Last year, it was 878,000, and that was a year ago. And then last month, it's at 898,000. So pretty consistent.
close, okay.
Yeah, pretty consistent.
And that's really our entry-level market then, in that
Yeah,
condo.
but again, I'm gonna make a prediction, we're not building any more single-family detached homes. They're
Uh-huh.
kind of going to be extinct animals, and the demand will continue to be higher for those. And I think in the next few months, I'll predict by March, April, May of next year, I think you'll see those prices way back up again.
Okay, we'll watch and see.
We'll watch and see. Stay tuned. So
Terrific.
what else? What else is going on?
Well, the other thing that we watch real closely is the Federal Reserve Board.
Okay.
Right? We have one more Fed meeting here in 2019 prior to the end of the year. And the odds of a rate reduction of the quarter is about 80% right now, or what those that predict the Fed future are saying. So it's almost...
Think those are safe predictions? What do you think?
I think so. I think so.
Okay.
I think the Fed is... they're looking at the tea leaves, and they want to make sure that the economy doesn't slow dramatically. And so dropping the Fed funds rate helps to support economic activity and keep things in a little bit more stable sort of environment, as opposed to seeing maybe some slowing.
So again, Todd, but if it goes down, say, a quarter of a point,
Uh-huh.
we may not see a drop in home rates.
No, absolutely not. The short-term interest rate is not tied directly to mortgages.
Right.
Uh,
So
you'll
if folks are waiting for that, that's not going to materialize
No,
necessarily.
in fact, as we've talked about before, I'll see interest rates long-term go up in response to a Fed decrease.
We've talked about that,
All
yeah.
right, and it has to do with supply and demand of money and where the rate of return is for an investor.
Exactly, yeah.
And so, I wouldn't count on that, driving rates lower. I think they're going to continue to be attractive. I think we're in a fairly stable, low-rate environment.
And I think a stable market. So
Uh-huh.
would you not agree with me? I think it's a great time to buy.
Yeah, absolutely. And 0.25%, up or down, isn't going to change the world usually for folks on a home purchase. If we saw rates go up a full percent, now we're a full percent lower right now than we were a year ago, interest rate wise, right? And
That's significant.
It is significant, and that makes a real difference for
Yeah.
folks. And again, I think that's why you're seeing, the demand now on the buy side for
Absolutely,
folks.
and coupled with some lower home
Yeah,
prices.
exactly.
So it makes it a good time.
Mhm.
All right, well, great. Well, that concludes our wrap-up. We've got Chamber of Commerce, next video.
Yeah, absolutely. That'll be good to see what's going on in the business community.
In the
here
business
Milpitas.
community there, that'll be good. And then you have a safe, happy Halloween, and
Thank you very much. Same to you. Make sure to answer the door when.
I do. Got lots of candy ready for the kids.
Lots of great treats. All right, so here's a tip. Head to Debbie's house.
Oh, boy.
Trick or treating.
Okay, I'm gonna get some more beds. Okay, Todd, I guess we're done for today. Anyway, that's it. Anything else? Or
That's it. Thanks for joining us.
thanks for joining us.
Happy Halloween,
Happy
folks.
Halloween. We'll see you next month. Thank you.